Broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone. My name is Kate Trace. I'm the director of the Housing Stability Services program here at TDHCA. Welcome to day one of our contract implementation training. We're excited to have everyone signed in. I see we've got a pretty large group of attendees. So I hope everyone is getting familiar with the GoToWebinar panel. You'll notice that we have sign language interpreters. They'll be available for the training today and for the next 2 days. And you'll see either myself, Meredith, Frank, or Alex presenting. You have the option to look at our faces or just focus on the presentation material. So I think with that, we'll go ahead and get started. Meredith, can you jump to the next slide, please? Okay, so I'm just going to go through a little bit of housekeeping. All of these materials will be posted online. You should bookmark this website. This is where all of the Housing Stability Services program guidance and information and trainings and everything is kept. So this is the website. If you have any questions, this is where it'll be. At the end of the training, we've blocked out about 2 hours today. I'm not sure we're going to use the whole time. We want to be conscious of your time as well. I know we've taken 3 days out of your schedule this week. So we'll go through the contract material, and then we will have a question and answer session at the end. If there are questions that are specific to your contract that are a little bit more detailed, we'll follow up with you afterwards. But if there are questions that are general and useful for the audience, we will go through all of those as much as we can, and then we'll get back directly with you with any specific questions. To submit questions, there is in your GoToWebinar panel, there's a little questions box. Please use that box. I don't think you have the option for the chat. We're not going to be monitoring the chat. Just please put everything in the questions box so we can keep track of that. And then we are recording this webinar. We will post it on the webpage. We'll post all of the slides. The slides are available in the handout section of GoToWebinar. And then we also have a sample boilerplate contract that has been uploaded. I'll hand it over to Meredith in just a moment. Meredith is going to go through all the stuff that's in your contract that Texas or the federal government or our legal department makes us put in the contract. We just want you to be aware of these items. Tomorrow, we'll get a little bit more in depth into client eligibility, allowable activities. And then on Thursday, we will do all of the reporting. So that's kind of an overview. Meredith, could you advance to the next slide, please? So for today, like I said, we'll do a quick program overview, very quick. I'll run through who our staff members are, who you can contact with any questions. And then Meredith will take it over and do all of the contract overview, all of the addendums and exhibits. I know you have all been working on your benchmarks and your budgets. Those are things that will go into the contract. And then, like I said, at the end, we'll have a segment for questions and answers. So please, submit all the questions you can. We've got some other staff standing by to go through these questions. So a quick overview. I think you're all pretty familiar with this, but this program is funded through Treasury. Treasury released through 2 large appropriations last year and the year before in support of the coronavirus relief aid, Emergency Rental Assistance 1, ERA1, and then ERA2. The funds that came to Texas, TDHCA and state leadership has decided to split that up into the rent relief program, which is fully expended and we're ramping down, and any other funds that come to the state, we're administering that. And then separately, 10% of those funds can be used for housing stabilization services. So that's this program. This training is specifically for ERA2 for housing stability services. So I think everyone attending now, this is what your contract is for. It is only for stabilization. This is not for rent. This is not for utility payments. It's kind of everything else around it that can support a household to be stably housed. So let's go to the next slide, please. Okay, so like I said, I'm Kate Trace. I'm the director of this program. You'll probably interact a lot with all of the staff on this screen. Each subrecipient will be assigned one program administrator and one contract specialist. These are the folks that each month you'll submit your reports to. We will approve your reports. We will ask you any questions. If you have questions with your programs, eligible activities, with amendments, that will go through your administrators and your contract specialists. So through the course of getting your contracts executed, you will become very familiar with these folks if you haven't already. So can we head to the next slide, please? Okay, I'm almost wrapping up here. So these are 2-year contracts, right? So in the next 2 years, you'll be reporting to us monthly on the households that you're serving with housing stability funds and the amount of funds that you have spent. You'll report that to us each month, and then we will reimburse you for the activities and the funds that you have spent. Since these are 2-year contracts, our benchmarks are set by every 6 months. So you'll have 4 benchmarks to meet through the length of the 2-year contract. Like I said, we'll be in touch often. We have 1 week in advance of every one of those monthly reporting deadlines, we'll host office hours. It's just a virtual 1-hour session 1 week in advance of the reporting deadlines where you can join in, ask questions. The information for that is on the website here. And then I put the registration link in here as well in case some of you have printed out or saved the PDF of the slides. This is also on the website. It's the same link each month for the entire length of the contract. If you just want to register and join office hours, that's a good way to keep in touch with us monthly, if you have questions. So can we go to the next slide, please? Okay, the final thing I'll mention is general communications from housing stability staff will come through listserv announcements. If you're new to TDHCA, please sign up for at least this listserv. Here's the link. It's also on the website. We can send it out. Once you log into the listserv system, you'll want to look for the list name called TDHCA, and that'll give you a whole bunch of topics for all of the programs, some of the specific policy things that we do, some rulemaking, a whole bunch of topics. But you'll want to make sure you select the Housing Stability Services program topic, and that way anytime we post new materials on the website, we host a new training, going forward, all communications will just go through the listserv. So it's on you, it's on your staff. Please sign up. We don't have contact lists kept up to date of all of the subrecipient staff at your agency. So please do sign up. You have to, once you sign up, confirm in an email. I think some folks have missed that step. You'll sign up, you'll receive an email to confirm that it is you. So make sure you do that as well. And can we go to the next slide, please? Okay, so that's it for me. I'm going to hand it over to Meredith, and she will start talking about your contracts, which are coming. Okay.
Hey everyone, I noticed somebody raised their hand. If you have a question, go ahead and put it in the question box. I think that will be easier than the raising the hand feature. Okay, so as you can see, the contracts will have a start date of March 31st, 2022, so this week. We have already been working with many of you to identify the eligible activities that you want to provide with the funds. And any allowable costs incurred between March 31st and the contract execution date will be reimbursed either with a one-time cash advance of funds upon contract execution or in the regular monthly reimbursement process that comes with your monthly reporting requirements. So basically, if we aren't able to get it all signed by the 31st, you can start incurring costs as of March 31st. So what we're going to do, as Kate kind of mentioned, is we've picked out what we think are important sections of the contract that we want to highlight, that we want you to be aware of, and just kind of talk about just a little bit as you're preparing to start your programs. But be sure to read through it. There's stuff we didn't necessarily add to the presentation. So first up is service area. We must be provided your service area by May 16th. Sorry, I can't see my notes. Hold on 1 second. The subrecipient must outline the service area in its contract for itself and for the city subawardees and subcontracts. Now, this is mentioned a little later too, but be aware that you can also change your service area. You can make alterations to it as you're going. If you're seeing that you're getting clients from, the next county, the next zip code over, you just have to let us know. You have to get written approval from us. But as of right now, we will need a service area for your contract to be signed. And as you see on the bottom bullet, we use this specifically so citizens can look up services in their area. So it's very important. So the de-obligation of funds, that can occur if there's a failure to meet any of your expenditure benchmarks. And those include the monthly expenditure and the performance report and the contract benchmarks. So as you're going through monthly, we notice you aren't expending enough or you're not going to meet your deadline, we might have a conversation with you about de-obligation. And that money would either go to another high-performing subrecipient or potentially into the Texas Rent Relief Program. So there can be no duplication of benefits. This is a Treasury rule. Under no circumstances can a household receive duplication of benefits. Any excess from a duplication of benefit must be returned to the department within 10 days. So a couple of highlights we want to make is we have partnered with the Texas Homeless Network. They have been awarded HSS funds. And so if any of you are planning to work with them on their vouchers, you need to let us know, because we will need to have a discussion with the two of you but to ensure there's no duplication of benefits. Our other partner is TAGIF, the Texas Justice Foundation. I'm sorry, I don't remember what the A stands for. They are providing legal services all over the state. So if you are also planning on providing legal services, be sure to check with us, check with TAGIF, where they're working, because the client cannot receive services, the same services from both you and TAGIF. And Frank, who is presenting tomorrow, is the program administrator on TAGIF. So if you have further questions, be sure to email Kate and Frank, and they can definitely help you with that.
Meredith, I just want to jump in here real quick. We got a question about duplication of benefits, and I just didn't want to wait till the end. I think we can address this right now. So a duplication of benefit would be if a client received the exact same service paid for by this grant from two separate subrecipients. So it would not be a duplication of benefits if a client went to one organization and received transportation services, and they went to another organization and they received a utility deposit. But if they got, landlord incentives from two separate organizations, that would be a duplication of benefits. And like Meredith said, we'll get into how you're going to document that a little bit more detail tomorrow. But this is just to make sure that households are not receiving the same funds for the same services from two separate entities. So I just wanted to address that now while we were on this slide. So I'll butt out now. Thank you.
Okay, so as we just mentioned a minute ago, you are allowed to have an advance of funds. After contract execution, a subrecipient may request a one-time advance of funds, no more than 30 days cash needed, by submitting a request to HSS staff with details of the use of funds. Now, this advance must be used within 30 days. So if you're going to request one, be very careful on how much you're asking for. It's only supposed to tide you over until you're able to ask for reimbursement to get your program up and running, and then able to ask for reimbursement for the next month. We don't want advance to go on for months and months. The subrecipient's request for advance of funds shall be limited to the minimum amount needed for the effective operation of programs. The one-time option, payments will be made on a monthly reimbursement after that. And you can do both admin advance and the program activity cost advance. For the indirect cost rate, I know this doesn't necessarily apply to everybody, are only allowable if subrecipient has an approved federal indirect cost rate or is using the de minimis rate on all its federal contracts. Your approved rate will appear in your contract and shall be reflected in your budget. So subcontracts, the next couple are about subcontracts and subawards. I know some of you are going to be doing that, so be sure to ask any clarifying questions in the question box. This language is pulled directly from the contract, so if you have any, if you need a clarification. The subrecipient has the responsibility for ensuring the performance rendered under all subcontracts are rendered so as to comply with the contract terms. Basically, your subcontractors need to follow what's in your contract, and if you create a contract with them, be sure to go through this one. All sections are marked where a subaward or a subcontract need to include those sections. So if for any of the eligible activities or any of the travel, we'll get to it. It'll say in our contract, you need to add this into any subawardee or contract, which is what the next bullet says. Okay, for subawards, any subaward must contain all the applicable terms and conditions required by federal and state requirements. Subrecipients must provide HSS staff with the applicable contact information for all subawards. By May 16th, the HSS staff need a subawardee report, which will outline how you're going to do the subawardee application process, the subawardee selection process, and all contact information. These are the rules and regulations that were in the NOFA that we and you must follow, and where we get all of our eligible activities and what you can and cannot do. So these, we're just pointing them out. The American Rescue Plan Act is where this money is coming from. 2 CFR Part 200 is the Code of Federal Regulations, and it's the Uniform Administrative Requirements, Cost Principles, and Audit Requirements for Federal Awards. We use this a lot with to find out what you are and are not allowed to do. The Texas Grant Management Standard, beginning January 2022, local governments in Texas are required to follow the Texas Grant Management Standards when administrating public funds. So these coincide with 2 CFR Part 200. And the Texas Administrative Code, Title 10, Part 1, Chapters 1 and 2 are specifically for TDHCA. We followed these rules when we were putting together the NOFA, when we allowed everybody to do the appeals. That's where we get all of our rules from. For the compliance audit review, TDHCA's compliance division will conduct either a desk or on-site monitoring review during your contract term. The state auditor may conduct an audit or investigation of any entity receiving funds from the state directly under any contract or indirectly through a subcontract under the administrative agreement. So that's a lot. So basically our compliance department can come in either once a year, possibly twice a year, and do an audit review. So be sure to keep program documentation, including policies and procedures, accurate and up to date and accessible format for review upon request. So stay organized, stay up to date, and be ready for an audit review. Records retention. Subrecipient must maintain records for 6 years. So be prepared to keep them for 6 years. They're in your contract and right here on these 3 bullets are other situations where that time may lengthen. But basically be prepared to keep them in an accessible location for 6 years. So in 2 years, we will need a final reporting. Subrecipient must file a final expenditure and performance report within 45 calendar days after the end of your contract. So that's March 2024. So you're going to be doing monthly reporting until then, and then at the end of your contract, we'll need a final one. And also we will need a, the second bullet is an inventory report of any and all equipment that cost $5,000 or over for that has a useful life of more than 1 year, purchased in whole or in parts with funds received under this contract. So just be aware of that, be prepared that that will be coming in 2 years. So this is for travel, and this slide is for your travel, for staff's travel. It's not for client travel. Subrecipient shall adhere to CFR Part 200. See, you'll be hearing that a lot. On its board-approved travel policy. Subrecipient's written travel policy shall delineate the rates which subrecipients shall use in computing the travel and per diem expenses. And as I mentioned earlier, travel policy information must be in agreement with subgrantees. This is one of the sections that you will need to carry over to any subawardees. Limited English proficiency. The subrecipients must ensure equal access to services by non-English speaking residents. You must be prepared to provide program applications, forms, educational materials in English, Spanish, and any appropriate language based on the needs of your service area. To ensure compliance, subrecipient must take reasonable steps to ensure that persons with limited English proficiency have meaningful access to the program. And that includes services and oral and written translation when necessary. We know there's lots of diverse areas in Houston and San Antonio, so be sure to pay attention to this section of the contract. So prevention of waste, fraud, and abuse. This is a fairly long section in the contract, and so we've kind of, this is a pared down version of it, but subrecipients shall establish, maintain, and utilize systems and procedures to prevent, detect, and correct waste, fraud, and abuse. For more information, there's a specific website linked here, and there's more information on this in your contract. So this also has been pared down. There's a lot of policies and laws that are mentioned in your contract that you will need to follow. As you could probably imagine, they are mostly about non-discrimination and equal opportunity and accessibility. So you can see the specific policies in your contract. So make sure to follow fair housing. Subrecipient will not use funds in a manner that discriminates based on race, color, national origin, religion, sex, familial status, or disability. And subrecipient agrees to carry out equal employment opportunity program in keeping with the principles of 1965 President Executive Order. And accessibility, subrecipient shall operate each program or activity receiving financial assistance so the program or activity is readily accessible and used by individuals with disabilities. So again, there's more details on those specific acts in your contract. The fidelity bond and insurance requirements. All subrecipients must get a fidelity bond, and as you can see, you can use admin funds to pay for it. Subrecipients shall maintain adequate fidelity bond coverage, a minimum of $10,000. Subrecipient and subgrantee must modify its standard insurance policies if needed to cover the work that you're going to be doing under the contract. And again, as I mentioned, subawards, you must incorporate this provision into any contract with a subawardee. I know we have some faith-based subrecipients for ERA2, so be sure to read this section carefully. Basically, clients cannot be required to attend any religious service in order to receive a housing stability service that will be funded under these funds. They cannot be used explicitly for religious activities such as worship, religious instruction. For any direct financial assistance from HSS is not allowed for religious activities. So any service that you're providing must be voluntary, or any religious service must be voluntary. Okay, everybody has already turned in their direct deposit forms because you turned them into me, and I'm fairly certain I've got all of them. So this slide is just to remind everybody that if there's any changes, let us know immediately, because we will need to get those changes to our accounting department, and you need to keep in mind that they may take up to one payment cycle to be made. Okay, the addendums and exhibits. The addendums are going to be the same for everyone. They're certificates that we'll go through in a second that are for all contracts. And then the exhibits are what you've been working on. Your benchmarks, your contract benchmarks, performance benchmarks, and budget. You're all very familiar with those. Okay, Addendum A basically says you cannot use HSS funds to politically influence anyone or do any lobbying. Addendum B guarantees a drug-free workplace and the actions that organizations must take in order to maintain a drug-free workplace. And Addendum C there's a lot more on Addendum C. I took a lot of it out for this slide, so be sure to read over it. But it basically says certification that no principals at your organization have been convicted of a federal crime or disbarred from a federal organization. And the addendum gives you ways to look that up. Okay, now the exciting ones, the ones that everybody's been enjoying for the last week. Your Exhibit A is contract benchmarks. So as you can see, this was in the NOFA as well. These are going to be your expenditure benchmarks. October 15, 6 months out, you'll need to have spent 25%. April 15th, 2023, 50%. October 15, 2023, 75%. And at the end, April 15th, 2024, 100%. And then on May 15th, 2024, 100% of administrative funds and a closeout report. So a couple of ERA1 recipients have already been told this, but for any more of you on the training, all the expenditure benchmarks are going to be the same in order to smoothly get these contracts signed. But your benchmarks, ERA1 specifically benchmarks, can be amended depending on when you're able to start spending your ERA2 funds, because ERA1 and ERA2 will overlap for a little bit. So that's specifically for ERA1 subrecipient. And then your performance benchmarks of unduplicated households were also part of that. Okay, these are some important dates. Monthly performance report by May 15, 2022. So that'll be your first one. That'll be your first reporting date. Monthly performance reports will be due by the 15th of each month. Now that can change due to holidays or the 15th falling on a weekend. So be sure to check our website. We'll keep a chart of the due dates for each month. And that chart also has the office hours we do that month. So bookmark our website. Be sure to frequently go, be sure you're know the right date for your reporting. Final monthly performance report will be provided on April 15, 2024. As we mentioned already, closeout report May 15th and inventory report. Okay, Exhibit B, performance statement and benchmarks. Again, as we already mentioned, your service area will be required, but it can be changed throughout the contract period with written permission from us. And this one also has the eligible activities you're planning on providing, the estimated households for each activity, and monthly reporting. So as I've highlighted in red, I know all of you probably have a lot of questions about eligible activities and monthly reporting. Those trainings will be Wednesday and Thursday. Wednesday, Frank will be doing going through the program guidelines. And on Thursday, Alex will be going through the reporting. So write down any questions you have, and I bet they will probably answer them during their presentations. So Exhibit C, budget. I know everybody worked, I know for a fact everybody worked on that since we reduced everybody's funding amounts. So a subrecipient may expend amounts. Let me rephrase this. You can move up to 10% of your funds among the activities in HSS and other financial assistance buckets without an amendment or staff approval. So if you want to move some funds from two different activities, you see one's really taking off and one's not, you can move up to 10% without telling us. Budgets. However, keep in mind when you're planning that the amounts cannot be moved between housing stability services or other financial assistance without a written contract amendment if it's over 10%. And administrative amounts cannot be moved. And the total budget cannot surpass what you have listed. So you cannot go over what we've said we're going to give you. Okay, Exhibit D, income determination and verification. Subrecipient and any subawardees must follow the income determination method to determine whether a household qualifies for our funds. Any household receiving housing stability services or other financial assistance must be determined to be an eligible household through the following verification methods: household COVID impact certification, household housing instability certification, household income certification. So we've attached the income eligibility flowchart. It's also on our website. And I don't know if Kate wants to go over that or not. I'll let that up to her because this is our last slide before Q&A.
Okay, I think we will hold off on that until tomorrow. We'll go through eligibility, client intake, eligible activities. But if you did want to, go ahead and take a look at that flow chart, that's available on the website, and it will be part of the handouts tomorrow. But it's a really good tool in kind of breaking down the client income and eligibility requirements that Treasury has set for us, because they have I'm losing the word here, self-certification. A client can self-certify if they're not able to gather documentation because of, you know, their housing instability. But we'll, like I said, we'll go through that tomorrow. Let's see. So I think, Meredith, you said this was our last contract overview slide. Is that right? Okay. All right. So we have plenty of time for questions. We do have some questions that kind of refer to what we talked about today. And then we also have questions that we will get into in detail in the next few days of training. So I think maybe we can just start from the top. We'll review some of the questions that have already been answered, just so everyone knows if it's, you know, if you don't want to read through the little questions panel there. We've received a few questions about procurement for specifically from ERA1 housing stability subrecipients if you're already working with, if you've already procured services. This is something that we need to clear with our legal department, so I'm not prepared to give you a definitive answer right now. But since you are currently expending your ERA1 funds, you know, whatever that answer is that we're going to try to clarify this week in advance of the contracts being effective, you will have ample time should you need to do procurement for ERA2. I'm just not ready to fully answer that right now. So that question came from our Houston subrecipient. We'll get back directly with you, and then we will put out general guidance on procurement if you're already existing subrecipient and you want to continue those same activities. Let's see, I'm just going to go kind of down the list in the order that these questions came in. We talked about duplication of benefits. Again, in addition to the 44 contracts that we have with the subrecipient agencies on the line now for this training, we also have a contract with the Texas Homeless Network to support their administration of emergency housing vouchers. So if you're working with THN or if you're, you know, in their network and you're assisting clients to get housed through the emergency housing voucher program, we've alerted them that they'll need to coordinate to make sure that households that your organization are supporting are not also receiving duplication of benefits with them. So that, you know, we've already identified who those organizations are, where that crossover is. So just be aware that we're gonna provide some extra technical assistance on that duplication of benefits. And then same thing with the Texas Access to Justice Foundation. They have a contract with us currently for ERA1, and then additionally for ERA2 that will also extend for 2 years to provide legal services. This is assistance with landlord and tenant mediation, representation in eviction court. So if your organization is proposing to do legal services, and I know there's a few that are, you'll have to make sure that the services that you're providing are not duplicating services that are provided through subawardees of the Texas Access to Justice Foundation. And again, we've identified who you are, we'll be in contact, but I just wanted to mention that kind of generally for the duplication of benefits. And again, this is something that we'll go into tomorrow. There is a household certification that the household will be required to sign that says we are not receiving benefits for this service from another organization. So that'll be your documentation that the household will have to certify that they're not also receiving this from another agency. Let's see, let me go down. Let's see. And then I'll invite Frank to jump in for questions as well, if you want to answer some of the ones that you have that you've answered. I see we've got some questions on landlord incentives. We'll go through that tomorrow. what the allowable caps are, how you can use landlord incentives. If this is something that you are proposing, this is something that we would have had to have received in your application, right? You should have provided your, your policies and what you're going to do on this. So if this is something new, certainly we can talk about if that would be something eligible to wrap into your program. But reach out to us directly if you have any specific questions about adding this into your benchmarks. We had some questions about documentation. I think this was when Meredith brought up the slides on having your records retention for 6 years, and then also having documentation readily available for TDHCA's compliance staff, or should there be a fraud investigation, or should the state auditor's office monitor TDHCA's administration, and then subsequently our subrecipients administration of the program, how you need to have those files available. Electronic files are okay. We don't set requirements for you don't have to have paper copies in your office. Electronic files are okay. But just make sure that those files are organized, they're accessible, they follow the policies and procedures that you've set at the beginning of the program for documentation. You want to make sure that it's consistent through the life of your program. Let's see. We have a question about direct deposit. If you're already set up, you should be set. Meredith mentioned that she's collected everyone's forms. I think you should be okay. Let me see. We have some
I can jump in quickly on one that I answered. So we had a question about duplication of benefits. So we'll talk about this a little bit tomorrow as well, but on the client intake form, we ask that you have the client certify and state that they haven't received the same benefits from another ERA2 subrecipient. And that's what we use as our safety check on that.
Okay. We have a question about equipment. Someone asked about, are computers considered equipment? Yes, they are, according to the 2 CFR 200 federal regulations, but you wouldn't need to report that to us unless your purchase was at or exceeded that $5,000 threshold. So if you have a question when you're purchasing or looking to purchase this equipment, reach out to us specifically and we can give you specific guidance. I could not imagine a case where you would need to buy a $5,000 computer, so definitely don't do that before checking with us. Just don't do that, please. And I'll also say, in the federal regulations, they talk about vehicles and vehicle purchases. That's not something that's allowable through this program. If you were to buy, for example, like a freezer for your shelter operations, if you provided meal services, that's something that may exceed that $5,000 threshold that you would need to get our approval for. Should something like that be approved, then this is just an example. I'm just throwing this out for an example. You'd have to get our approval for that, and that would be something that would go on the inventory report at the end of the contract period. Because of the nature of this program, it's more, case management and client services based, and then, also support for rental deposits, utility deposits, those types of financial assistance. I don't anticipate there being a huge, excuse me, a huge amount of volume for those inventory reports at the end. It's just something that, we're required to put in your contract should something like this come up. So again, if you have specific questions on that, let us know. Please don't buy lots of, $5,000 plus pieces of equipment and then come ask us if it's okay. Because I would hate for that to be an expense that's not allowable, and then we wouldn't be able to reimburse you for it. Okay, so that's all I'll say on equipment. Let's see. Someone asked about, do clients need to be United States citizens? Citizenship is not a requirement of this program. And we'll get into that tomorrow. I just, wanted to say that the eligibility that we're going to go through tomorrow includes housing stability. It includes household income. It includes a couple of things that are very clearly documented in the Treasury guidance. Proof of citizenship is not one of those. So that's all I'll say about that. Let me see. Staff, please jump in if there's other specific questions that we want to answer.
Yeah, I can hop in real quick.
Thanks.
Somebody asked, can this contract be used to match another of our programs, especially if we use landlord incentives and or deposits from ERA2 and then make rental payments through another of our programs? Yes, this is allowable. This is how ERA1 worked at some points with our TRR program, and I know there are some local rent relief programs still out there. And so if a household or one of your clients is receiving rental payments through a different program, you are allowed to serve them and encouraged with the ERA2 funds.
So I think this question may, just the terminology, I just want to make this clear about match. We'll go through this tomorrow as well. Match for federal programs like ESG or home is not allowable with these funds, but you could use match for some of the other programs like a VISTA program or something like that, but we'll get into that specifically. I don't think anyone has put match as an allowable proposed expense in their programs and in their narratives. So if that's something you're considering, please get approval from us before you do that. ESG match is not an allowable expense under the Treasury regulations. But as Frank had mentioned, it is okay to layer these funds to support a household to receive, as much assistance as they need to maintain or obtain stable housing. And like I said, we'll go into that in detail tomorrow. So bring your questions. We'll be as prepared as possible for that. Okay. Let's see. I think we're getting kind of pretty specific into stuff that we're going to go in tomorrow. The purpose of today was really just to introduce some of those contract things that we have to put in all of our legal contracts because this is federal funding, and we have some, state and city partners and units of local government as partners. So we've got a lot of those specific things in your contracts. You'll notice the contract boilerplate PDF that we uploaded as a handout for here. This is what your contract is going to look like, and then we'll fill in all of your organization's specific information, right? So all your benchmarks will be attached. But this is something that if you wanted to get, if you needed to get it routing through legal, you can share this with them. And then as soon as we get your benchmarks approved and finalized, we'll insert that, and then none of the provisions that are in this contract boilerplate are going to change. So you can just, provide your legal department or, your executive team or your board, whoever needs to sign off on your contracts with an updated version of this. But this is just to help you get going. I think, let's see, do we have any more questions rolling in? We do. There's a couple of folks that have a lot of specific questions. So if you feel like you're not getting your questions answered, we will follow up with you specifically. Something, utility payments, W-9s. We'll follow up directly with this stuff, and we will provide clear guidance on this directly and then to the group as well. Let's see. I think this is going to be probably a good stopping point for today's webinar. I do appreciate your time. I appreciate you blocking out. We had allocated 2 hours for this. I want to make sure we dedicate tomorrow for eligibility and allowable expenses. And then on Thursday, all of the reporting. So please take a look through the contracts that you've got. Take a look through this training. We will get back specifically with some of these questions. I know I said we'd get back specifically on procurement for ERA1 subrecipients. So up here on the screen is contact information for all of the housing stability staff. Please reach out to us with any questions. You know, if you feel like you're not getting a question answered, it's, you know, we're consulting with our legal department to make sure that we're giving you the correct answer. This is, you know, this is pretty new for TDHCA to run this type of housing program with Treasury funds. I think we're all very familiar with HUD, you know, housing programs, but this is slightly different. So we want to make sure that we're providing you with the most accurate guidance. So, you know, please, thank you for your patience. You know, reach out to us at any time. And then, like I said, we'll get back to you with questions. So is there anything else that you wanted to mention before we wrap it up, Meredith?
I just want to say thank you for tuning in to the boring part of these 3-day trainings. And thank you for listening. I hope it was informative.
Yeah. Okay. Okay, so I think we're going to wrap it up. This recording will be posted on the website if folks didn't have a chance to attend. So again, thank you so much, and we will see you tomorrow.